What happens to the company of the car that you're driving goes bankrupt and goes out of business? Think it can happen? Well, yes, it can actually affect parts, sales, service, resale of that vehicle. And it can literally turn a $50,000, $100,000 vehicle into nothing, into dust in a mere flip of a switch. You don't think this can actually happen? Well, we look around. Fisker struggled. They couldn't quite get off the ground. That's one example of a car manufacturer that went out of business in short order. They just couldn't get the money together, reliability concerns, and now they're out of business. How about other manufacturers? We talk about Pontiac. Of course, remember the old Fieros, gone. Mercedes toasted the smart cars. How about Pontiac, as well as DeLorean? That famous car from Back to the Future? Absolutely gone. All of these car manufacturers have either gone out of business or been sold off because they were poor sellers or they just didn't have the durability, reliability, or the popularity that customers were looking for. So what ultimately happens to all of those cars and the parts and accessibility for you as an owner of the car company that decides to just go out of business? Well, you think it can happen, and it is happening. And even today, there's lots of conversation about car manufacturers. Look at Stellantis. The struggles are real. They're on the verge of potentially shutting down brands like Ram, shutting down brands like Jeep, and potentially shutting down brands like Dodge, who basically only sell Durangos as well as the Hornets. Unfortunately, even Dodge is on the literal verge of collapse. And Ford, ups and downs, the struggles are real. The ICE vehicles and the conventional old school manufacturers are struggling with sales these days as the transformation to EVs is well underway. This puts a lot of non-competitive brands at the risk of going out of business. Yes, particularly with the Chinese markets knocking on the back door, any brand that isn't flexible enough, innovative enough, or has the financial sense to manage their business is all at risk. This is a very volatile market. While margins for brand new sales is somewhat variable. While they've come from a place of volume sales where almost little dollars are made on the transaction of any particular brand new vehicle, the fact is they're trying to transform into a market now where they're selling less vehicles but at a much higher margin. But that puts everybody at risk. All it takes is a bad marketing decision, and poor sales for 4 consecutive quarters is all it might take to shut down many of these businesses. So what do we all do with owners of vehicles of companies that potentially could be going out of business in short order? How do we make sure we protect our assets, our money, our investment in these vehicles, and as well secure parts for vehicles that may be going out of business? Look at even Jaguar, for example, is the latest, where they've transitioned into pure EVs and they pretty much all but dumped all of their internal combustion vehicles. Where does that leave owners of the F-Types, the F-Paces, the XKs, the XKRs? All of these vehicles that we once loved are going away and are no longer supported. How does service support that? Where do you get the parts from? Well, many car manufacturers try to create other car brands. Scion, for example, was a spin-off of Toyota. Well, Scion was intended and marketed for young buyers. Unfortunately, Scion lasted only a few years, and while they built great cars, a lot of the drivetrains were built on Toyota vehicles. So while that brand did go under, a lot of customers and owners of Scion vehicles found themselves scrambling, buying Toyota parts, Toyota brakes, Camry engine parts, and fortunately they were able to keep a lot of their vehicles running regardless. And if you were a do-it-yourselfer, it was really of no consequence. But if you were a person looking for a dealer network, you could continually take the vehicle to Toyota, as most Toyota dealers could manage to fix these vehicles. But then we think about other vehicles. Obviously, brands like Saab went down, could not survive. GM took partial ownership, but even that was no longer supported. So gaining access to parts for companies like Saab were an obvious challenge. But sadly, earlier this year, we saw Fisker, of course, the manufacturer of a startup electric vehicle company trying to obviously compete with the likes of Tesla, just didn't quite have what it took. Quality control issues, programming, software, they didn't have the manpower, and they certainly didn't have the cash flow. And sadly, thousands of customers bought vehicles only to find out very shortly after, as a matter of fact, earlier this year, that Fisker went Chapter 11. That's right, they filed for bankruptcy. Now, what are the legal recourse? In many cases, very little. I know in Canada, the recourse is very minimal. In the US, again, it just comes down to more civil courts. If you could find a squeeze in the back door, but once these companies file for Chapter 11 or file for bankruptcy, that sort of protects them from any further litigation generally. And so if it's a company that didn't have a lot of assets, didn't have a lot of resources, it's like trying to drain blood from a stone. there's no such thing. Fisker owners were trying to scramble to get software updates, components, but even once push come to shove and you're looking for battery changes or service supply and support, good luck. And that's where a lot of people are snookered. So if you happen to have a car or a vehicle that is coming from a car company that goes under, sadly, much little recourse is even available. So at that point, you're definitely better off trying to stock up on spare parts if there's even a sniff or a hint that this car manufacturer is going out of business. As a matter of fact, I spoke to many people talking about their beautiful and luxurious Jaguar F-Type. I actually owned one. And this year earlier, I sold it. And a significant part for the reason I sold it wasn't because the car was not amazing, because it was actually better than most of its competitors. It's a simple fact there was a hint and a sniff of it going out of business. And here we are, lo and behold, Jaguar and all the ICE vehicles are going out and being discontinued. Where does that leave the stock storage for parts, servicing? Well, service will continue on for a few years. What about parts? Same thing, they'll continue to stock up parts for probably a few years. But if your intention to hold on to a lot of these vehicles after they go out of business for a significant amount of time, good luck. Because those parts are going to start dwindling away. Even simple parts, starters, clutch parts, interior components. You think of those specialty items. Sure, tires that you can get, you can retrofit brakes, and in some cases even transmissions are, easy to retrofit in a lot of these car manufacturers. BMW and Jaguar and Range Rover, a lot of these brands are using common parts that are sourced from other manufacturers, like ZF automatic transmissions are used in a lot of different brands. So for some reason, if all of a sudden your Jaguar F-Type blows a transmission, well, you can likely source it from somewhere else. You just need the part number and likely you'll find it in some other option. So not all is lost, but the sad reality is your legal recourse is usually relatively out the window. So you believe consumer protectionism is in place. Well, in most cases you'd be wrong, because that really only generally applies for businesses that are in business. And so for any of these car companies that file for Chapter 11 or go bankrupt, like in my opinion and many opinion, there are certainly some car companies today that have been around a long time that are risking riding the bankruptcy line. And so any car manufacturer today is at a huge risk of going out of business. With this transition to electrification means that nobody's clear from that risk. But these troubles can extend even much further than actually having protection or any of those concerns. Think about even on the most simplest of terms. You happen to lose your key fob for your car, and it happens to be one of those car manufacturers that goes out of business. Where do you think that leaves you? Up the creek. Because even with these rolling computers nowadays, which every single car manufacturer is far more complicated than they've ever been before, there's a huge risk that this could literally incapacitate your vehicle. If you can't get a replacement fob for one that you lost in the snow somewhere, there's a high possibility that that vehicle is rendered a big lump of coal. A few other problems that a lot of people don't consider. Warranties. If you're worried about buying that new startup car or that car that's fresh to the country, and you went out on a risk because you like the way the gadgets looked and you like the way it all put together and you like the colors and the style and the technicalities of it all, you could be in a world of hurt. Because if that car company goes out of business, there goes your warranty. I mean, warranty is so important these days with these very complex vehicles. Without it, you're pretty much flying by the seat of your pants. On top of it, you think there's some of these proprietary tools that are used to service these vehicles that you can't go down and get your garden variety OBDQ code reader and self-diagnose some of your own issues. There are often no options. And not only that, with a lot of the iCloud or cloud-based subscription services that tie directly to the computers or as well as the infotainment programming, without that iCloud subscription, because the company went out of business, that goes out the window too, and it leaves your vehicle literally in limp mode. You're probably thinking there's some loophole somewhere. Maybe there's a form of compensation you can still get. Well, the fact is really there is very little. All you can do is line up with the lineups with the rest of the creditors, people looking to pursue additional compensation. Say, for example, this car company went out of business, and lo and behold, 6 months later, you blow an engine part and you're looking for some warranty protection. Well, there's very little recourse in that. All you can do is get behind in the back of the bus and wait behind all of the other creditors. All you can do is file then, and then hope at some point, if that company's assets are liquidated, that then you're going to have a licensed insolvency trustee looking after those affairs and might delegate enough resources to you to protect you in the case of that warranty claim. But that's rare, and that's a long shot. Now, if you happen to be one of the unlucky people that bought a car from a car company that just went out of business, if you can't get direct compensation, you can only hope that they may have a restructuring plan in place. That's something worth inquiring about, because if they have a restructuring plan in place, then through the courts and the delegations of resources that are outstanding, you may be able to acquire additional resources for your repairs or your compensation or whatever it is. But again, yet one more long shot. And in some jurisdictions, whether it's Canada, certain provinces, not all the same, OMVIC or AMVIC, and certainly in the US or maybe other jurisdictions, we can look at potential compensations due to contingency fund that may have been put together in advance by these car companies. If that contingency plan and that contingency fund are in place, you might be able to, again, one more time, with a long shot, get yourself a little bit additional resources to protect you from some of the losses in the event of some sort of warranty claim or catastrophic failure. But the worst part is service itself is usually far and few between. You're going to have to start outsourcing, looking for some relatively compatible peer manufacturer that is willing to step up and service some of these vehicles. The reality is that is going to be a long shot as well. And to throw another handful of nuts and bolts down into that crankcase, there's more complications when we talk about recalls. I mean, we already know service work is going to be a challenge unless you find somebody else to do it. And certainly some proprietary tools are going to be tough to get, as well as an iCloud subscription, and find somebody with the know-how to tackle any of the challenges that these vehicles may have. That's all going to be a big issue. Compensation, of course, warranty claims, all going to be out the window. What about recalls? Recalls are something that was usually driven by, the NHTSA, the National Highway Traffic Safety Administration, that when there's a recall, it's based on safety issues, whether it's airbags, whether it's a backup camera, whether seats aren't anchored properly, whether the car won't stop, whether it'll veer off the road, whether it'll come apart. Those are recalls because they're safety related. But what if a recall comes up, or there's an outstanding recall and the company goes out of business? Well, in an example like Fisker's case, all they can do is basically wave bye-bye. Now, with that said, there was an expectation by the Department of Justice in the United States that basically claimed in a court filing that Fisker must repair all vehicles for free. And Transport Canada on the Canadian side of the border said ditto that. We're more or less going to follow the US recommendations for recalls. Now, while a lot of the information is pretty much vaporized already from Fisker corporate per se, there's a Fisker Owners Association that's running independent that has been a great source of much information should you need some info or where to, how to. There has been some resource, as well as if you needed parts, maybe a replacement water pump or some other components, and maybe they're part of a recall. You're still likely able to get those parts in short order from some of these other areas. With that said, that may not last very long, and that's the other challenge with the risk that we have with these vehicles, that if this company goes out of business, even if they have this backlog of parts to fix recalls, to fix service part challenges, whatever that is, they're likely going to run out at some point. They're not going to continue manufacturing parts. They're closing their doors. That's Chapter 11, and that's what it means. So basically, the longer you hold on to this vehicle, the much bigger risk it is for finding parts, keeping it on the road, and keeping it safe. So the best recommendation that a person can come up with, each and every one of you, if you're shopping for your new car and you want to try something new and fresh, just be careful. Look at their track record. Look at their financial reports. That all matters. I mean, we always look at reliability and features and technology, but I think in today's day and age, it's more important that we understand how long this company could potentially be in business or not. That could have a major impact. Think of manufacturers like Volkswagen. Look at all the catastrophe they're dealing with. They're looking at closing plants. They're looking at laying off thousands, tens of thousands of workers, and they're struggling as this transformation into the EV market is underway. Look at Stellantis. They're looking at getting rid of their CEO. Thousands of workers getting laid off this fall, as well as closing plants, and the UAW continually lights a fire under their rump. They're also at risk of losing some of their brands. How about companies like Nissan, another big loser? Sadly, their market share has been dwindling aggressively because of what they've expected were sales in China, but the Chinese buyers are looking at Chinese-made vehicles for a much more competitive price. That leaves Nissan struggling for sales. The CEO's taking pay cuts. They're talking about buying back smaller dealer networks, and sadly, just sales are down in the tank. And while even car manufacturers like Ford and GM all look rosy and there's bragging that their sales are on the upslide, remember, there have been bailouts in the past where the government stepped in and paid a significant amount of money just to rejuvenate and get them back on the proverbial road. Nobody's exempt. Everybody's potentially at risk. And you as the informed buyer have to go out there informed, knowing the background, the history of that car brand, the trends, what they're looking at, what their future projections look like, and the power that they have, both as from a reputational standpoint, reliability, and some of their design themes and the concepts that they're coming up are clearly going to tell you a little bit more about what you need to know to build that confidence to buy a car from a manufacturer that hopefully won't go bankrupt. And with all of that said, check out right there a couple of classic videos why I do believe those car companies that are a huge risk from going bankrupt. Hope to see each and every one of you on the next one. See you real soon. Bye-bye.